All right, guys, welcome to the High Stakes Deals podcast. I'm your host, Brandon Locascio, and I'm here with the one and only Clooney, my co-host. Let's go.
I'm the co-host.
I'm
the Andy Richter.
He wants to be the host soon. We'll see.
Yeah.
He's working his way up. So, hey, we're here today. We're gonna spit a little game, talk about some random real estate topics. We're gonna put Clooney in the hot seat actually, and talk and see what he knows about.
Well, I already feel like I'm in the hot seat.
Yeah, it's gonna get hotter. Let's go. Okay, so we're going to do a little lightning round. We've pulled some questions from online, also asked, and regarding various real estate and investing topics. So these are questions that other people are Googling, and we're going to see if Clooney can impart some wisdom on all of us. What do you think about that?
I can certainly BS better than the next guy.
BS us with some wisdom. Okay, let's see. Okay, I'll start with one right here. This is one that comes up sometimes. What is the BRRRR method?
What is the BRRRR method?
The BRRRR method. People throw that out there all the time. You hear that BRRRR investing.
Yeah.
BRRRR.
Yeah. So let's just spell out or sound out the acronym.
Yep.
So it's buy, renovate,
correct.
Rent. Oh, geez. Okay. How many R's are there in that BRRRR?
So if you guys are listening, so BRRRR, it's an acronym in real estate investing. A lot of people throw it around, and it's basically short or meant to memorialize or symbolize a way that you can invest in real estate.
Right.
And so, like Greg was just saying, BRRRR stands for buy a property, renovate it, then you get it rented. So now you got some income coming in.
Oh yeah, refinance.
Now you refinance
and repeat.
And so the whole idea is that you can take some capital, buy a property that's in need of a good renovation, fix the property up, and then once you have a tenant in there, the bank will now give you a new loan on it and let you pull your money out.
Right.
And now you can take that cash back out that you used to buy the property. Right. And the repeat part of it is you can buy another property. Now you're playing with the house's money on the first one, right? Because you just fixed it up.
But what is the time frame for something like that?
Well, yeah, I guess it depends. I mean, I would say typically you're probably 6 months.
Right, because you're saying that because the loan has to take place. The refinance has to take place for this process to work.
Correct.
You cash out what you originally put in, and obviously, hopefully, the point is to get more to go to the next deal.
And a lot of banks won't let you refinance any sooner than 6 months.
Right.
Some actually require you to wait a year, but some do it sooner. But again, the general idea is that one of the downsides to investing in real estate is that it's cash heavy. And if you aren't raising capital from private investors and you're just using your own money, you kind of get stuck fast, right? At some point you run out of money or all your money's tied up in the first couple of deals that you've bought.
Right.
And so by doing the BRRRR method, you're able to unlock that capital, pull it back out, still own the property, and now you can go buy more assets.
I think it's a really good method, and you get to keep the asset. Although hence being, the rents that you collect should be paying for the new covering the new mortgage expense. But yeah, it's a good process. It's a good method.
I got another one for you. Somebody asked, is it profitable to be a landlord?
Is it profitable to be a landlord?
I mean, I would hope so, right? Because why would anybody do it? But in your opinion, is it profitable? And maybe even how do you make sure that if you're going to be a landlord, that
it's profitable?
That it is profitable. You're not just running a charity.
Well, I mean, there's probably a few steps in the due diligence process, but I think it happens in the buying. When you buy that asset, that property, you better buy it right. Is there a good value add there? Are you buying it, conceivably for below what the market will bear if the thing was completely rented, market rents? So if there's a value add there, but there's a lot of deals out there right now that don't pencil out, and they still, seem like a good deal for a number of reasons. Would
you say that it's also important? I mean, you're talking about, what is profit in terms of being a landlord, right? I mean, profit could be you bought a property for $300,000 and you rent it out for a while, and at some point you sell it for $500,000. Okay, I made $200,000 profit.
Right.
But I would say more literally, being a landlord, that in between time, you're operating the building. And so profitability probably relies on making sure that whatever your mortgage payments are going to be every month and all your other expenses, that they're less than the rent you can charge.
Right.
In other words, a mistake that people make sometimes, they get excited. They go, I'm going to buy this rental property. And they get into it, and they're like, yeah, this is great. I'm going to be able to rent this thing out for $2,000 a month.
Right.
And then they get in there, and they're like, oh, damn, my mortgage payment is $1,500, and then my taxes are $500, and my insurance is $200,
Right.
and then I've got expenses. I got to do some repairs once in a while. Damn, this thing's costing me $2,400 a month.
Right.
I thought it was a great deal at $2,000.
So,
right? So now they're upside down on it.
Yeah, they're upside down. Is that
Yeah.
profit? Well, in California, you definitely get the appreciation in the building.
Yeah,
So,
there are some people that will buy that type of deal. Use that
Right.
example, and they'll justify it by saying, I don't mind if I lose a few hundred every month, and it actually costs me a little bit of money every year to own this property, because at some point that $300,000 deal in that example goes to $500,000. Sure,
Right.
okay. Call me old school, but I still like a little cash flow. I mean, it doesn't
Right.
matter how much it is, but if I buy a rental property, I want it to pay for itself.
Yeah.
It doesn't need to make me rich every month necessarily, but if I got to feed the beast every month, to me that kind of defeats the whole
That-
purpose of owning a rental property.
I agree.
You know?
Yeah.
Oh, here's one.
Hey, well, all right. Ask one more, and then I'm going to ask you one.
Oh, goody. All right, stocks versus real estate. What's a better investment?
Well, listen, you're going to have to ask or find out what the company's doing for each stock. I don't have that that knowledge. I mean, I got to go out and research every company. I mean, we know Apple's a good company, Tesla's good, but the point about real estate investing is, you're buying a hard asset. Your money is secured against the property, so you've got a hard asset. It's real property. And there's a lot of benefits to that. One of the ones that we were actually talking about yesterday was it's insurable. If the building burns down,
They write you a check.
you're gonna
Yeah.
get a check. Well, of course,
Yeah.
that's probably why the insurance rates are going so high. But anyways, another topic. But yeah.
Would you say it also depends on what you're looking for as an investor? I mean, in other words, the downside of real estate investing is that it's illiquid in most cases.
Yeah.
In other words, if you buy a property and you have it as a rental,
Yeah.
and you need money tomorrow, unless you have a line of credit against it or
Right.
there's some money in the operating account for the business. I mean, as far as liquidating and getting all your money back
Yeah.
out, whereas a stock,
You could
you
just
can make
sell
one
it.
phone call
Yeah.
and you can get that cash back.
Yeah.
Now,
I-
that
I
could be a
every-
good or bad thing depending on,
right, right, where you are in the market when you bought it. Yeah.
Well-
but that's a philosophy that each and every individual makes. Like, why do some people have a Charles Schwab account
Right.
with 15 different stocks, and they just think they're completely safe with that? And they may be. I don't know the mix of stocks they have, but and then of course you have somebody who likes to invest in real estate.
Well, and again, not to beat the dead horse on this, but just thinking about in the past for me, like I'm a real estate guy. I only own real estate. I don't have any stocks, no 401k. And a little diversification for some people, that's fine. But I'm like the anti-diversification
Yeah.
because I want to be the specialist in real estate.
Sure.
But I know in the past when I've bought, for example, stocks, then what'll happen is I'll buy something, I'll get excited about it, pretend I'm Mr. Brandon the day trader, and then one day I'll need money or I'll be sick and tired of the damn thing,
Yeah.
and I'll sell it, and I'll end up losing a little bit of money. I put
Yeah.
$7,000 into it, I got
Yeah.
6,000 back today, whatever, and I do that a bunch of times, and I'm like, why did I do this?
Yeah,
And,
you
the
got to
real
be
est-
you got to be in it for the long haul.
Well, and there's smarter people with stocks,
Yeah.
exactly, and you can be patient in stocks as well. But I guess again, back to the illiquidity, real estate sort of forces you to be patient.
Yeah.
And during long periods of time in the right real estate, you'll make a lot of money.
Yeah.
So if you're forced to stay in the deal and be cool, calm, and collected, if it's a rental property and it's paying for itself every month, you kind of forget about it. You check in every month, make sure everything's cool. But as long as it's not burning down, there's no problems with the tenant. Over that X amount of period of months and years, all of a sudden you've created all this value. And so I think that forced, patience is a good thing.
Patience is a virtue.
Hey, that's
right?
what they say. I don't
Okay,
know.
Brandon, I got one for you.
Okay.
This is.
Did you think of this one, or did you find it online?
This is, well, I have thought about this one in the past.
you spent many a night pondering this question?
Yeah,
Oh,
in my
geez.
PJs with a hot chocolate or something.
And a brandy, yeah.
Yeah. Oh, and a brandy. Yeah. Jack and Coke.
Yeah.
But what is the outlook for multifamily investments?
Well, I think big picture, there's a couple of facts surrounding that. First of all, in the country, there's a major shortage of housing. That's not likely to be solved overnight, and it's pretty true across the board, no matter what state you're in. I mean, especially California, but they just haven't built enough property.
Right.
And so I know we have declining birth rates and things like that, but when you look at it, we still have a huge population, and
Yeah.
these people need somewhere to live.
Yeah.
And so when I look at multifamily real estate, it's different. You could argue like, okay, hotels, sometimes there's bigger demand or less demand. Obviously, COVID has wiped out the office sector just because it changed how everybody, started working from home and whatnot. But I don't see how you change needing a roof over your head.
Right.
It's a really hard one to just like go away overnight. So for me, there might be sexier asset classes in real estate. And don't get me wrong, I'd love to own the Plaza Hotel someday, right? I'd love to own the Empire State Building. I want to buy the Lakers, right? So there's other things we could do. But as far as like a core, really solid, safe investment, I think it's multifamily. And that was kind of a longer, look ahead. But, short term, I think the fundamentals are good. I mean, everything's gotten a little hammered because of interest rates. But again, people need somewhere to live. Rents have stayed steady, and I don't see that going on.
I agree. I mean, I think housing, single-family housing, is expensive, and rates are still high, and they need to come down a lot more. So, I think multifamily apartment buildings are a good investment because I think like you said, people need a roof over their head.
They got to live
the
somewhere.
easiest way to get that is to rent an apartment.
Until they figure a way to put us all in the Matrix or the metaverse, like we got to live somewhere here. We are in the physical world. So, Okay, I got one for you.
Okay.
If somebody is a new investor and they want to get started, should they, if I give you just a couple options here, should they flip a house? Should they buy an apartment building? Or maybe do an Airbnb rental?
If they want to get into investing,
they want to get into real estate investing.
Yeah.
What would you recommend, or what would the pros and cons just quickly be to those couple different approaches? Someone's like, Greg, I might want to start flipping some houses. I might want to do some Airbnbs.
Can we put a budget on it? 10,000.
I like that. That's
20,000.
great. That's great, actually. That's great. Corey just said, so are you on the mic, by the way?
I am. I turned.
Dude, I love that. By the way, can we get you in here or what? Or no, this is good though. We're gonna pan over to you once in a while.
Yeah.
Okay, that's a great point. So let's say that somebody has $25,000.
Yeah.
And they want to invest in real estate.
Yeah.
Should they
Flip a
use that
house.
$25,000 to start flipping some houses?
Yeah.
Buy some property, fix them up, turn and burn, baby.
Well,
or should they
maybe
sink it
invest-
into a rental, whether it's a long-term rental,
Yeah.
or would you go the Airbnb route? $25,000.
I wouldn't go the Airbnb route. It seems like the kind of the writing is on the wall.
Yeah.
A lot of municipalities and cities are frowning on Airbnb. So I don't know. I mean, I love that idea and concept,
model.
and I've heard some crazy numbers people making, but that model, listen, flipping a house, as everybody has been doing that over the years. I mean, that's where they're going to get their most experience.
Mm-hmm.
I mean, listen, experience matters, and if you can bridge the gap between what you don't know and what you should know.
Would you say that if you flip the house, you could turn that $25,000 into $50,000, $100,000? You could snowball a little bit faster with the flip because you're turning it over a couple times, and then.
How are you getting a house for $25,000?
By the way, that's a really good question, right?
Well,
so explain how you get a house, because I think you can get a house for $25,000.
You
But
rip
how do you
somebody
get a-
off. No.
And $25,000 might be a little bit light, but I think you can get a house for $25,000. Play that out.
You're talking about using special financing, and $25,000 if a lender can get you a loan of up to 97% purchase price. Then you got to put 3% down. So there's some programs out there, Corey, but you got to qualify.
So it's almost like saying go to an area that's not Los Angeles.
Right.
You got to go find an area where you have $200,000-$300,000 houses.
Right.
And that still does exist, even in
It
California.
does. It does.
You got places
Yeah.
way out in the Inland Empire, high desert,
Yeah.
Central Valley. So you're saying go somewhere where the housing cost isn't too expensive. Maybe
Right.
find a house that you can buy for $250,000 that needs some work, but if you turn it around once it's fixed up, maybe it's worth $400,000, right?
Right.
Something like that.
Right.
And you're saying,
Well, I'm saying
you
that
can get
that-
these hard money loans,
Right.
where these guys will loan you a big chunk of the purchase because they believe in the vision of that it's going to be worth the $400,000.
But the other benefit, Brandon, is that it's an active. You're an active investor.
Yeah.
And you can't help but learn every step of the process when you're doing that. So you gain a lot of experience, and hopefully you're profitable. So that is to me, listen, I'm telling you, that's just one way to go, and you could really learn from that. The other way to go is just invest in like a syndication. We're buying apartment buildings ourselves, and we have investors come in And
Right.
they're passive, and you can learn a little or a lot if you participate with the group.
Yeah, so in that route, they take their 25 grand, they invest it with us in one of our big deals, they own some shares in the deal. It's a little bit more slow and steady route, but that
Right.
money's going to turn over, and again,
Right.
maybe 25 turns to 50 or 75 grand, and maybe that takes 4, 5, 6 years of holding into this
Right.
large apartment complex, but they don't have to do any work. They're
Right.
very passive versus the house flipping. If they hit it right, they could turn it over a bunch of times, and they could actually probably build up a little bit more of a nest egg.
Yep.
And then maybe once they have a bigger play, then they could put some in some long-term investments.
Yep.
They could, so there's different options there. But I want to go back to Corey's, what he touched on too, which I think this is important. Let's assume that that person wants to start flipping with the 25 grand or any investment. Let's say it's flipping. And they get into it, they're like, oh shit, I need 50,000. Let's say 25 isn't enough.
Right.
How hard is it when you find a real estate deal to find that extra capital? Because we talk about it all the time,
Right.
right? Most of the deals that we have ever bought, we never had the money to
If
buy.
it's a
And we
good-
did actually close like everyone,
Yeah.
So,
Hey.
but how does somebody like that maybe doesn't think that way and doesn't think that they can just find someone off the street to loan them or partner with them on some more money? What would be the best way for them to
Family
to
and
bridge the
friends.
gap?
If you're first doing it, if
Yeah.
it's a good deal,
Yeah.
if the margins are thin and you have to explain the deal 4 or 5 different times in 4 or 5 different ways, then it's probably not. But if it's a good deal, the money you can
You're saying
find
friends
the
and
money.
family.
I
Now
would-
let's say that for some reason they don't have as deep of a friends and family circle. Where would they go next? Are there some real estate clubs they can go to pitch
Right.
their deal, to talk to other people that are
Right.
interested in real estate, or what would they do to try to find some more capital? You think?
I was just going to say, go to a meetup, a real estate investment meetup, and
Yeah.
there's plenty of people out there with $25,000, $35,000, $45,000 that would do it. Will partner with you.
Well, and it's funny. So Greg and I were just at Rich Summers' meetup that he does every month in downtown San Diego. And wow, what a great event, by the way.
Yeah.
We went down there because,
Yeah.
one, we wanted to do some networking and have a good time, but also because we're looking at putting on some similar events up here in Los Angeles. There's a lot
Yeah.
of guys in LA, guys and gals that do real estate meetups, but I have to say, Greg and I have been to quite a few of them, and they're just kind of like, meh. It's at someone's office, or it's just kind of like, I don't want to say it's like at an Applebee's, but it's just like random place, but it's just random stuff
If
like
it's
that.
at an Applebee's, I'm not going.
When we went down to this one that
I
Rich
do love
put
their
on,
food, though.
yeah, this one that Rich put on, I mean, you're on like the 35th floor,
Yeah.
beautiful terrace, indoor, outdoor, bartender, you're overlooking
Yeah.
the whole Coronado Bay or whatever it is, and it was just an awesome event.
Yeah,
and so
it was. The vibe, the overall vibe was really cool. It's like
Yeah.
everybody knew what to do. Rich wasn't even there in the beginning. He showed up towards the end, and he's a real. I just said hi to him. He seems like a really cool guy. Like that's probably why it's so successful. But when you get there, he's not there, and people are just talking. It's talking about finding some money.
Yeah.
You could tell 5 people there, and you'd have the money.
Well, I was just going to say on that point, while we were there, right, because we're talking to people about, hey, we're looking for more apartment buildings and investors, and what do you guys do? And everybody's like trading what they do. But there was a whole bunch of people there. There were people there that probably had money that were looking for guys like us to invest with, and there were other guys like us that were looking for partners and looking for deals, and it was just this really cool thing. And we've been to a bunch of those. Again, this is probably one of the better ones we've been to, and we really, glad we went. But it's like you kind of forget if you hadn't been in a while. Like sometimes you got to just like get out of the office, get out of your bubble wherever it is, and you got to actually go hang out with some people in person to talk shop.
Yeah.
So it was a good time.
Yeah, Rich's, there was no pressure. It
Yeah.
was just get out there and meet and talk about deals.
I did like that. Yeah, it was just what is he call? Oh, he calls it beers and deals. So if you guys are in the
Beers
San
and
Diego
Deals.
area, I believe it's the second Wednesday of every month. Beers and Deals, Rich Summers, check it out. But if you're in LA, start coming to ours, and we're gonna announce that soon. So
Hey, Brent, let me shoot one, and probably everybody wants to know what this is, and maybe you can go into depth about this. But what is the capitalization rate in real estate?
it's kind of like a way of saying what's the percentage return on an annual basis if
Right.
if you buy a property. So if you buy a property for call it $100,000 and it has a 5 cap rate, it means it makes 5% a year. So if you owned it free and clear, you're getting $5,000 a year from that property. That's essentially what you're doing, right?
Right.
Cap rates historically, if you're in the Midwest, somewhere out of California, maybe the Southeast, you buy a property, cap rates might be 7, 8, 9%. I don't know. They actually start getting up there pretty fast. in California, most cap rates are like 4 to 6. That's typical.
Yeah.
When, a couple years ago when interest rates were low, everything, even in the Central Valley, you were, hard pressed to even find like a larger-ish, 20 unit plus apartment complex that had some good upside that was trading at anything less than a 5 cap.
Right.
So I think the common not to go too far down the rabbit hole on cap rates, but sometimes people get into real estate and they hear the term cap rate and they start researching it and they assume, oh, I have to only look at things that are high cap rates. Well, a lot of times properties that are high cap rates, meaning there's a bigger premium of what the seller's offering in terms of the sales price. The reason is because it's in a bad area. So it's almost like bad area, the seller's going to give you a little bit better of a deal on it, and so the cap rate looks better. Or hey, seller's kind of a slumlord, hasn't fixed all this stuff up, and so he's going to give you a little bit better deal. So I always tell everybody, be a little bit leery. I'd rather get a lower-ish, I'm going to say ish, a lower cap rate, not the lowest, but something mid-range. I'm okay if it's a little bit lower if there's a lot of upside on the property and if the property is in a fantastic location. For me, there's the two most important things, three most important things that
Don't
that
say
matter.
it. Location,
Yeah,
location.
yeah, I would say it 3 times, but no, it's it's location.
Yeah.
It's the potential upside on the rents.
Yep.
And it's how much can you really cash flow at the end of the day?
At the end of the day, yeah.
Yeah. What are the economics on it?
Yeah,
So,
well, I know you don't want to go too far, but so cap rates are inversely related to price, right? So as cap rates go up, the price of the building goes lower. So it's more advantageous price. But as the cap rates go down, then the price goes up. So they're inversely related. But I think, and you can speak to this probably better than I can, but cap rates are a key metrics in the real estate apartment business because it indicates the value. You can easily indicate anticipate the value of a property you're thinking about purchasing by looking at the cap rate based on what the income will be fully rented market rents.
Yeah.
So that's a good indicator. You can figure out the value of a property by the cap rate.
By the cap rate.
Yeah.
Okay, I got one for you. What do you say to somebody that says, well, I'd like to get into real estate investing, particularly being a landlord, buying some multifamily real estate, but I don't want to get calls about toilets, termites, I don't want to have to deal with tenants not paying, and I got to decide if I'm going to evict them or they're going to screw me over or beat the hell out of the property. How often do those things happen? And is it, is it that big of a deal? And how do we kind of hedge our bets to make sure that doesn't messes up too bad? What would you say?
Slow you down because you can't scale if you're answering all the phone calls. Well, it happens.
And how do you protect against the bad tenants and all these weird things that you hear that happen sometimes?
Well, in the tenant screening process, you have to check that out, and sometimes I guess you have to go with your gut. It doesn't seem right, but the tenant screening process, applications, and verifications of rents and income, but these things happen all the time, every day. And they could bog you down. So, there's a couple of properties that we own that I kind of, self-manage, and it can become time consuming. And so, if you want to scale your business and start buying more properties, you got to rely more on property managers. But you have, we're soon going to have asset managers, but right now, me and another partner are managing the property managers and just making sure that they are returning phone calls and taking care of repairs and stuff like that. But it's time consuming. It's a whole nother, element of the business.
Yeah. Do you think people should hire a property manager when they buy a property, or should they manage it themselves?
What's the size of the property?
Let's say they're buying a triplex to start, a 3-unit.
I would honestly say manage it yourself.
Okay, let's say that it's 4 hours away from where they live.
Well, you can still manage it yourself.
Okay, what if it's like 3 states over from where they live?
And then you got to cross a bridge in the ice tundra.
Snowbank. Yeah. Exactly.
Then I would get a property manager.
Then you get a PM.
You would have to get
But you're saying if it's reasonably close, you're starting a real estate career, if you're not just going to go the route where you invest with somebody else, okay, that's one route. But if you're going to be like an active investor and you're going to buy your own property, you think maybe it's better to kind of get a little fundamental understanding of how these properties operate by having to manage it yourself?
I do. Yeah, I do. That's again, the experience is the key. And, I wish, when I was growing up, I wish my father, actually got me involved in real estate sooner. Learning these key fundamentals will actually just, you'll just, sky's the limit because you'll realize you can overcome most of these.
When did you get into real estate?
19. Well, it was, I was in the finance business, mortgage business,
Yeah.
since 1996.
So you were in,
Yeah.
like me, you were in the real estate business for
Yeah.
kind of a while. I mean, I
Yeah.
was in 96. I don't, if I tell you how old I was in 96, I think
I don't wanna know.
By the way, I think I was 8.
Okay.
So
Were you roller skating?
Yeah. But I was going to say, like you, I got into real estate and I had worked as a realtor for a lot of years.
Right.
And it was kind of a progression to move more onto the investor side of things. And, my big thing was, it's easy to be a loan officer or a realtor. You get into these parts of real estate and you make really good money, right? You could sell one house and pick up a $30,000 check.
Right.
No big deal. You start picking up those here and there. Cool. Like I'm coasting, right?
Yeah.
Well, that's how a lot of people operate. And then you start getting caught in the trap of like, I got to get the cool car and the watch and all these things.
Yeah.
But what happens is, and I kind of felt like this is a big part of my 20s, right? I was like always chasing that next deal.
Yeah.
I didn't have anything that was working when I wasn't working.
Yeah.
And for me, that was when the light bulb went off when we started BCGK, was that we could actually buy rental property. Don't get me wrong, we're still going out there looking for clients and getting our commissions, and we're still doing our other business ventures. But at least we had one aspect of what we were doing that would just slowly sit there in the background and just work when we weren't working. And that, to me, that was the allure to finally becoming a landlord and owning some property.
Oh, sure.
Because look, I mean, by the way, look at everything that we've bought so far. We were just talking about our smallest property we still own. We've since went on to buy some larger properties, but our smallest property we currently own is a 5-plex. We bought that in 2020, so about 4 years ago.
Yep.
We paid $270 for it.
Yep.
Cash flows every month.
Yep.
And I think when we bought it, it was cash flowing like $3,000. Now it's cash flowing $4,000 or $5,000.
Yeah.
It's always been like a no brainer property for us. But we bought this little property for $260.
Yeah.
And we haven't had to do much of anything since
No.
we've owned it, right?
No.
I mean, I'm kind of
Yeah,
summarizing. We've done some things, but the point is, it's been very hands off.
Yeah.
Greg and I are down here running around doing real estate stuff in LA. This little property that we bought for $270 is up in Bakersfield, just chilling, doing its thing. It's rented out. We were thinking about selling it, which I don't think we're going to anymore.
No.
And we'll talk about that in a minute. But we were thinking about selling it, and we called one of our buddies up there who's a broker in Bakersfield, and he said, "Yeah, if you want to sell this, I can probably get you $700,000 like super fast if you're not trying to be greedy and hold out for $750 or some bigger number." And I just thought it was it was a perfect example to Greg. I said, here's a little property, our smallest property we have, and we bought it for $260.
Yeah.
It's paid for itself every single month and made us some money along the way, and we could sell it tomorrow for $700 if we wanted to. And that to me is the reason that more people should consider real estate investing. It was very hands off. It's a real property. It's taking care of itself, and it's taking care of us now if we decide that we want to liquidate it.
And when you have assets, and I'm talking about property, you have options. You could refinance the property, like Brandon said. You could sell the property. It cash flows. So I'm starting to err on the side or lean to the side of holding on as long as you can. Refinance, and if the new loan is being paid by the cash flow, well, you still own that building, and you just pull out a bunch of cash to either do some more investing.
You're saying over time when you have these properties, when they go up in value, it's better maybe to pull a little cash out along the way and keep the property because every so many years you can just pull a little more cash out as it goes up in value, as long as you don't get overextended. But you're saying that sometimes is better than, take the example of the 5-plex. We bang out of that thing right now at $700,000. Uncle Sam's going to say, all right, well, that's cool. You guys made a nice little profit, but you owe me $100,000 in tax or $140,000 in tax, and now we're just giving that to the IRS for no reason right now. So no, it's a good point.
That is true. All those little things whittle away at you.
Let me ask you this:
and a refinance, tax free.
Tax free. Refinances are tax free. Look into that, people. If you guys don't know why, but we won't go down the rabbit hole hugely on that. But yeah, tax free. So what about this? So we've met a lot of investors that love houses. It's just single families. And I'm talking about investors that want to rent stuff out. They're not flipping like they're like us. They buy rentals. But guys that are like, I got 15 different houses in 10 or 15 different cities. I got them all over Southern California. But I like a house because it's easy for me to understand. It's a house. I feel like it's going to rent better, or it's going to keep someone in place longer versus an apartment. Maybe has higher turnover or whatever. But they're not apartment people. And then you got people like us, or we're the opposite. We don't want to own houses. We want to own the apartment buildings. But what are some of the pros and cons, do you think, between the two of those? And why would someone want to do either or?
Well, I think getting into houses, single family, it's easier. the financing's easier,
Yeah.
everything's easier, and it
You're
just
saying, yeah.
and I think that's why people that are first getting into the business, they'll buy a house or 2 houses or a duplex or something, but mostly a house. I think it's just easier level of entry.
Mm-hmm.
You know what I mean? As opposed to, I was like, holy crap, we can buy a 5-plex or a 10. There's no way I can do this by myself. But,
Yeah.
you get over that. But I just think that why people do it is just because it's just an easier entry level.
Right.
As opposed to just going right to like a 10.
Plus, if you got a bunch of different houses spread around, you could just at some point say, hey, I just want to sell this one and cash out a little bit of my portfolio right now. I don't have
Right.
to sell the whole apartment building, right?
Right.
So that's another
where
benefit.
they
You
where
could
they
just-
go wrong is they've got 18 houses and they're self-managing them and they're running around with a plunger and a screwdriver, and I don't even
their face on a van, and yeah, exactly. Well, and you went into what I was going to say is that
Yeah.
the biggest issue people don't realize is that if we buy one apartment building that has 20 units, let's say, and they're stacked, right? 10 units on the ground floor, 10 units on the top floor, and one big old roof, right? We got one roof. We got one location. We got 20 units that are probably very similar floor plans, similar products. So we can send our maintenance guy over to this property, and he can swap out toilets, deal with the roof, whatever it is, one location. But if you got 18 properties in all kinds of different cities all over, the 405 and 10 freeway and
Yeah,
wherever.
yeah.
Now you got to spend all this time going to different properties, and not to mention they're all different. You might have 18
Yeah.
different roofs. You have 18 different sewer lines. You have all these different things that can break down and cost you money
Yeah.
versus having your investment in one place.
Yeah, there's pros and cons to each one of those. Single family homes, apartment. I mean, one of the things I think what you would say is a single family is easier to liquidate,
Yeah.
on the market. You know what I mean? But, an apartment building properly priced would sell pretty quickly too. But
Well, think about
yeah.
this also. Let's say that you have, 5 or 6 tenants in one location, and one guy is a bad apple and stops paying you.
Yeah,
Right?
there you go.
Okay, you're getting rent from the other 4 people,
Right.
but this one guy isn't paying you. Okay, at least you got some money coming in to cover the bills this month.
Right.
But with the house,
somebody
if,
doesn't- yeah.
if the one guy you rent it to doesn't pay you, you're
Yeah.
pretty much at zero for the next 3 months while you try to evict them or
While you
work
try
some
to
deal out
evict
with them,
them,
right?
yeah.
So the apartment building kind of hedges your bets by having multiple people send you money every month. I
Yeah.
mean, for lack of a better term, in a simplistic
Yeah.
way. So, what do you got? I got a couple for you.
Oh, you do?
Yeah.
Are you
Greg,
just
where
going
do
to
you
go through
see
the whole
yourself in
list?
5 years from
Yeah,
now?
yeah.
Long walks on the.
Well-
Greg keeps saying he wants to retire. By the way.
Listen,
And,
well,
we're not going to let that happen.
I don't. No, I guess just slow down. Maybe
We're not going to let that happen either.
Oh shit! All right, well, go ahead, fire one off, and I'll fire one off, and then we'll take it from there.
Yeah. What do you think? What do you think is going to happen with interest rates? So interest rates,
Oh.
we all got spoiled for such a long
Yeah.
time. Interest rates on cars, houses, everything were very low. I mean,
Yeah.
for houses, they've been They were at 2.8, 3.5. I mean, they were let's call it 3% interest rates for such a long time.
Yeah.
Even before that, 4 and 5%, right? And then when rates went up, what is it now? Maybe 20 months ago or something.
Yeah.
Call it 2022. They started going up.
And where were they at? Where were they at?
Well,
Like
they
seven-
spiked up to
7.5?
8%, basically.
8%. Okay,
Now
yeah.
they've come down a little bit. But
Yeah.
what do
No,
you think?
well-
Big picture, are interest rates going to come
well-
down? Or are these high rates here to stay? Or how can anybody, by the way, that wants to go
Oh,
buy? Well, a couple questions here. But how
Yeah.
can anybody go that wants to buy a house? I mean, think about it. Like, right, the millennials and
Yeah.
Gen Z.
Yeah.
Are we past Gen Z? Is there another one now after that? Corey, help me out here. What's after Z? Alpha? Jeez, yeah.
I like the Gen Alpha.
Yeah, I'm already feeling old because I'm like, I don't even remember that. Yeah,
Corey,
but
what are you?
I am a millennial.
You're
Oh, you're a
millennial.
millennial.
Thank you.
Yeah, I'm a
Okay,
millennial.
we're in good company.
Millennial was born.
96 to
Like 02 or 4 or something,
maybe
right?
like 2000 to
96.
2000.
No. It's
2000.
no. Millennials are 81 to 96.
No.
No, it would have to be. I was gonna say, I'm in 87. Yeah, it would have. Yeah,
Millennials
wait,
are
Oh,
wait, wait.
81
millennials
to
are
96.
81 to what? To 90 what?
6.
81 to 96?
And then Gen
Wow.
Z would be 97 to 2010.
Oh, okay.
And
Gotcha.
then Alpha is 2010
Just terrifying.
Beyond.
now.
Well, geez.
I mean,
They're like 4, 5 years old.
Yeah.
wow.
Right. Well,
The
wait a
alpha
minute. You
guys.
said 2010. They were born 2010.
10. Alpha.
Alphas are.
Wow.
Okay. So
Okay, I mean, yeah, all these, but okay. So how do the alphas and the Gen Zers, right? Like,
I don't know. I don't know what's going on with those guys.
How does anybody afford to buy a house when not only has the cost of housing gone up, so much,
Yeah.
and it hasn't let off at all,
Honestly,
but also you take these
yeah.
rates that are now 7%, 8%, you know?
Can I go ahead, Corey?
I'm trying to figure it out myself.
That's what, Corey, I was going to say. The answer is I have no freaking idea. I don't know how these people are buying these things at these interest rates.
Yeah.
But I guess if you have to buy, you have to buy.
Right.
I mean, maybe you can't rent or you're
people end up just renting.
Well, that's what I'm saying. That's why the rental business is still pretty good because rates
Yeah,
are,
I mean,
and people
that might have
aren't
made it a good
selling.
point there, yeah.
People, I heard of statistics. 80% of America or 80% of people who own mortgages are at 4% or less. They're not selling.
Why would they sell if they have a 3 or 4% interest rate and they like their house to then go buy something else slightly different? Then they're going to pay like twice as much on the interest rate or something. Like,
the economy is obviously a hot topic and for good reason. But I don't know how these people do it.
Well, now that being said, rates are coming down a little bit.
Yep.
They just came down a little. But I mean, do we think they're going to get back to where they were? Can they even get to at least 4 or 5%? I mean, I don't know.
I think so. I don't.
You think so?
Yeah.
You think big picture they get down to like 4 or 5%? They get something more reasonable than where they're now.
The only if for some reason the Feds or something thought that inflation was still a problem, they may change course. But it seems like the course is to start lowering rates.
Yeah.
And I think rates, like you said, already have come down. So we need it. We need a kick in the kick in the shorts to help everybody along a little bit.
Yeah.
So
No, it's true.
a little somber topic.
Well, I think it's just a realistic topic, a lot of people would probably like to start investing in real estate or would even just like to buy their own roof over their head.
Yeah.
But the rates have kind of been,
Between the rate and just like the buy-in price, like
Right.
I
If you
make
need to
like
put 20% down,
$90,000 a year. I
Right.
do okay.
Right.
I can't afford to buy a house,
Right.
and I make more money than
Well,
most people.
Yeah. Well, no, you're right. Well, but do you want to move to Fresno or to Oklahoma City or something so you could buy a house, but not in LA.
But I couldn't make this money in Oklahoma City.
Right.
Yes.
I couldn't.
Well,
do
that's
this
what I
there
tell
anyway.
people.
That's a good point.
Corey,
Yeah.
people tell me they're moving here, moving there, whatever. Well, this is where commerce is. This is
Right.
where things, businesses exchange.
Yeah.
This is where it is, good or bad. I mean, it's our home.
Yeah.
Right.
And that's where we make money. But I would have to go to, if I was a young guy, I would have to go to the outskirts of Iowa, or
the Black
something.
Hills or something.
Yeah.
Greg was just in the Black Hills, I think. Where are you? South Dakota.
South Dakota. Yeah, my wife's family's from the Black Hills, and
It just sounds
it's-
cool. Like I just want to
it's-
check it out.
well,
it sounds something out of a scary
Sounds
movie, like the
Well,
start of a yeah.
It's
Black
Old
Hills,
West,
South
There-
Dakota?
So there's
Yeah.
a town called Deadwood, Corey. Deadwood, South
Yeah.
Dakota.
Nope.
Yeah, but that's where
not.
Wild Bill Hickok was shot in the back of the head, and it's just got.
They still have his chair up in that bar, right? The little
They've got his
saloon or
death
something?
chair above the bar, and it's just got this great mystique about it, and you can tell it's Wild West kind of shit.
I just want to know if Clooney was rolling around on a Harley when he was over there.
Yeah, we were up there during Sturgis. and
Or on a horse, better yet.
Hundreds of thousands of motorcycles come in for Sturgis.
Wow.
We usually try and avoid it, but we couldn't this year. But no, they're all good people, and they're having a hoot and a holler too. So a little bit too much, but
That's a good time, man.
Yeah.
That's a good time.
Yeah.
What else you got for me? I know we're gonna break here soon. We're gonna wrap up here pretty soon. But you got anything good for me?
Well, well, let me ask you this, Brandon. We're in the investment business of apartment buying.
No,
and-
never heard of it.
Never, right? Well, welcome to beginners class 1.0. But what are our next steps? And we've talked about this as a group.
Yeah.
But I know we're trying to scale our business, and acquisitions is key. And
Correct.
stuff like that. So where are we focused on? What are we looking to accomplish? Because we're just out of the beginners phase of as you would call it, an investment group. I'd say we're past that, but
Yeah.
we're in the medium stage now.
Yeah, we left the startup phase, and
Yeah.
we're now trying to, kind of get to cruising altitude. And I think what you realize quickly when you're involved in any startup, doesn't have to be just real estate related, or any business that you just, might own yourself as a sole proprietor or entrepreneur. You kind of get your business off the ground a little bit to a point where stuff starts actually happening, and then you quickly realize that systems and processes are breaking down, and you might be the system in the process, because you might be a one-man show,
Yeah.
or you might be a
Yeah.
3 or 4-man show, and it's just the hard part there is that, on the one hand, things are going well because you're getting more business and you got more stuff going on. On the other hand, it actually feels worse than when you were smaller temporarily, right? Like, because we kind of hit that. Like, we all of a sudden bought a handful of new properties and started raising capital, and we hit this little growth, spurt. But it went from progressively getting easier to manage the business to getting really hard. And then we kind of solved some problems, and then we met some new problems. And so, I guess that's par for the course in
Yeah.
any business, but I think that entrepreneurs have to be ready to expect the fact that they're gonna get past that infancy phase,
Yeah.
and they're gonna quickly have to start looking at their business in different ways. How can I outsource something, automate other things,
Right.
maybe lean into AI? Maybe I need a new partner. Maybe I need to say no to some things I was doing before and focus on other things that are a better use of my
Yeah.
time, or that fit more with the brand's value proposition. So there's all these things, and I think for us that's been what we've been going through. And I was on a podcast earlier. They were asking me about the new software we just got, which is
Yeah.
Yardi,
Yep.
and all these things. And that's really been our theme. And I think during this downtime, if you will, of acquisitions, meaning since interest rates went up, it's been very hard to get new deals and find deals that penciled. And so a lot of real estate investors have been using sort of the quote unquote downtime to improve systems, processes, sort of work operationally on the business and in the business,
Yeah.
and start preparing for that next run up. And so we've done
Yeah.
just that. And look, we're sitting at 53 doors. We have approximately $12 million worth of real estate right now. And our goal in the next 36 months is to get to $150 million mark, which will be about 1,000 doors where we buy.
Yep.
And maybe we'll fall a little short of it, or maybe we'll just totally beat the hell out of that
We'll
thing
just
and
cruise
exceed it.
past it.
Yeah, we'll get to something. But the point is to do that, we've got to really be a well-oiled machine.
Yeah,
and I think that was the big realization we came to. Any inefficiencies at a small level, when you start getting to cruising altitude, will just be magnified.
Yeah, I agree. We're looking
So.
forward to the journey.
Well, meanwhile, hey,
If I
High
don't-
Stakes Deals podcast. We're loving doing this. We've been shooting a bunch of episodes. We're finally starting to drop. We're everywhere you can listen to podcasts. I mean, if you're listening to this, you probably already know that. So appreciate you guys tuning in. We're going to try to keep this entertaining and informative, have you guys learning new stuff about real estate, marketing, building big businesses. And Clooney is going to work on his stand-up act and just, continue to, drop some bombs every week.
To be coming.
Yeah.
I'll be working on it.
All right. Let's rock and roll. Thanks for tuning in, guys.
Thanks, guys.
That's another episode. High Stakes Deals. Let's go.